From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, October 22nd. You're listening to the Macrocast. This is Tony Fratto. Coming to you from the road in beautiful northern Maryland right now. John Fagan, Brendan Walsh are regular partners on the Macrocast from Markets Policy Partners. Are you guys both in D.C. right now?
Yeah. Yep. We're in D.C. It's been beautiful fall weather this week. Magnificent. So looking forward to.
Although you're sweating out the Red Sox fate.
Yes. Yeah, it's do or die tonight. So we'll see. It's been quite a run.
Well, even as a Yankees fan, I'll wish you luck on that.
Well, I'll accept your I'll accept your luck, even for a Yankees fan. I'll accept anything.
Be careful. Yeah, be careful, because sometimes it's like my wishes are the kiss of death for a sports team. So, but I do wish you well. It's so much. The fall is so much more fun when when your summer teams are playing. And the same way, I feel the same way with hockey, right? It's like summer is so much better with hockey.
Absolutely.
Well, as uncertain as the playoffs are right now, I can't help feeling like this economy is uncertain too. How's that for a transition?
It
is. I feel like I've never been more uncertain about what should be a fairly normal outlook. I mean, we're getting readings from earnings that are telling us one thing. We're going to get to later in the show to talk about earnings that we saw this week and earnings to come. We're getting readings on inflation and GDP and the most recent jobs report. Trying to get clues on what's happening, what has been happening in China. I don't know if you were surprised by the slowdown in China in their previous quarter. But how are you reading this right now, John? I mean, the Fed's going to have some important decisions here that they've indicated. Any reason to think that they're going to change their direction? But if you had to say, look, the economy is this, our macro environment is X. Well, how would you describe it right now?
Yeah, just clear as mud. And I think that the discussion on last week's Macrocast with John Dick and Brendan going back and forth on the inflation picture was really, I thought that was spectacularly insightful. And we're just seeing so many cross currents here. And it's hard to say that, that the transitory thesis is as strong and as robustly defended by the Fed as it had been when initially put forward in 2020. And it's pretty clear that there are lots of FOMC members that feel very differently and are sort of abandoning transitory in favor of trying to get a hold of expectations. Now, it's, there's some discussion about the inflation being demand pull, that demand is so strong and the Fed should step in and hike rates, tighten policy, or whatever it is to try to suppress demand. But the other side of that, the more common or consensus position is that this is really about supply bottlenecks, and tightening monetary policy isn't the right prescription for that. And if you are looking at those, you're putting a lot of weight on the inflation expectations, and that's really where the debate lies on the Fed. It seems the hawkish side, aren't necessarily defending the idea that they aren't saying that rolling back quantitative easing and pulling forward rate hikes is going to do something about unblocking the port in Long Beach, but
right.
They want to make sure that the public has faith that the Fed is on the job and that expectations of price pressures don't get unanchored here. But these are slippery concepts, and we're at a time when the economy is clearly suffering from some of these headwinds, and it's the sort of bugbear that has been spooking equity sentiment to some extent over the past month was stagflation. But even as the signs of stagflation have gotten, perhaps worse, the equity market has staged a remarkable rebound and touched all highs last yesterday. So it's a very, very, very muddled picture, and they're just, people are trying to focus on what's right in front of them. And I think that you said it. The equity crowd is really focused on earnings right now. The fixed income crowd is obsessing about inflation. The commodities crowd are just, everybody's just shooting the moon with prices and riding the uptrend in oil and so forth. So it's really all over the place these days.
One of the things that I don't hear, we get a lot of talk about the supply chain bottlenecks, which I think are absolutely real and sort of significant kinds of structural shifts in how big and broadly owned firms are operating. That there's just a lot of dynamism in how how companies are having to structure their businesses and but also deal with these supply chain disruptions. But one of the things that I think runs counter to the inflation story going forward is, and I know it seems crazy when we're talking about a big infrastructure bill and a big reconciliation package in some form coming sometime soon, is that there is some fiscal drag out there also over what we had, and it's something I've been rolling around in my head a little bit. Just the fact that we had huge fiscal stimulus for 18 months, and the truth is, while it performed really well in protecting a lot of people, a lot of families, I don't know why we can't look at this past year and say, well, we did this huge fiscal stimulus, and it actually underwhelmed relative to what expectations were at the beginning of the year. And now that fiscal stimulus is running out. And so, if you go back to this time last year or January, after we had the stimulus that was passed in December, and we knew Biden administration's coming in, but new fiscal stimulus coming, the growth expectations, both for GDP and jobs, were off the charts. And we're squarely on the charts on both of those things. We haven't knocked that out of the park on jobs, and we haven't knocked that out of the park on growth. And now we're going to see less fiscal stimulus. So I remind people on both on the infrastructure and on reconciliation is that, you're talking about trillions of dollars, but it's trillions of dollars spread over 7 to 10 years. We were spending trillions of dollars that were going to be spent in a matter of months. And so that infusion into the economy, which was massive, it did save us from a recession and a depression. But that's, it's hard to say it did a whole lot more than that, right? I mean, so is anybody paying attention to the sort of fall off on fiscal that we're seeing now and over the next year?
Yeah, I think there's so much uncertainty on the fiscal side. There is an appreciation that the fiscal guns aren't firing as intensely as they were, and that this upcoming package, I think that there's a lot of, I think that the sense is, let's wait and see how this package comes out. And there was, the idea that this would have a lot of, it would have a very long spending timeline for the infrastructure portion. That's certainly true, but some of the social programs are a little bit more front loaded. Obviously, they're not filling up. I mean, these aren't going to fill the gap in the fiscal in the fiscal expenditures here as we tail off from the highly the historically robust outlays that we've seen. But I think that there's kind of a wait and see, and that's also coming on the tax front. That's so fluid on Capitol Hill. The idea that this would have that this package would have a lot of pretty challenging pay-fors in it, pretty lofty pay-fors. That is something that is coming off here too. So we're seeing on one hand, fiscal drag. On the other hand, the fiscal picture going forward is changing by the minute, it seems.
And on the growth front, I will say, in May and June, things were looking pretty good. And then the Delta wave hit. So Delta was
fair,
much worse for growth than I think people are giving it credit for. And it's coming up in the company earnings too. Just the amount, people didn't travel quite as much, but more importantly, what it did to the supply chain and is still doing really, really sapped a huge amount of growth. The consumer still spent, but companies really were constrained in what they were able to produce. And I suppose that's just a virology issue. It's not an economics issue. We've got to get out of the pandemic stage into the endemic stage. But knock on wood.
Well, if that's true, it's an excellent point, Brendan. But if it's true, right, then we're back. Then we're back talking about then we should be talking about transitory inflation more, and rather than permanent
We're in a low growth environment with a high inflation. It's not the normal kind of inflation because it's due to supply constraints, not necessarily massive demand, but that doesn't matter to the consumer at the end. And the consumer is seeing prices going up. And also companies are definitely seeing prices going up.
Yeah, no question. Like it definitely has an impact on companies, and we are seeing companies, having to, having that impact on wages and some of the investment decisions they're making or not making. And there's absolutely no question that it's a super important political issue right now.
But on the flip side, every game I watch, I see a Wendy's commercial for 8 spicy chicken nuggets for $1.49. I'm not sure I want to live in a world where 8 pieces of chicken cost $1.49.
Well, yeah, it's funny. I mean,
I want to spend $5.
You live in America, man. You live in America is where you live.
It is interesting. I mean, this inflation debate. I mean, one of the things we've seen, the market-based gauge of inflation expectations, tips break evens, really just roofing it this week, heading up to the 5-year tips break even is at record highs. It hasn't been around forever, but it's record highs and around 3%. And but then you kind of record highs is record highs, but 3% sounds that seems to be not compatible with where the Fed would want inflation to be. But at the same time, we're hearing companies that are talking about passing along some of these input costs and so forth. And Brendan talked last week about the potential feed through, the longer and more durable price increases that can be seen in the owner's equivalent
shelter,
rent.
The housing component, right? And that's sticky, so that's going to keep pushing things up.
So our base case is.
Go ahead, John.
Yeah, our base case has always been that a lot of this would be transitory, and we have seen things like the used car prices, rise up and crash. And rise up again in some cases, and ultimately
it's actually been going up in the last 2 weeks. The Manheim Index has increased again.
Yeah. I mean, some of these same dynamics,
not to the same extent that it was, but it's interesting that they have rebounded.
Yeah, it's reemerged. Some of these dynamics have reemerged during the Delta wave, but going forward, the expectation is that once these do play through, on the other side, we are going to be at a higher inflation equilibrium. Right. And that's actually what the Fed has told us they want.
Has been hoping.
And,
right.
But the part of the policy response that I just keep going back. Everyone's like, oh, the Fed has to react because inflation's going up. There's rich guys on CNBC are mad about it. The only way the Fed can tamp down inflation is to raise rates. The reason inflation's going up is because companies can't hire enough and don't have the manufacturing capacity to produce enough. Wouldn't higher rates exacerbate that issue?
Yeah, and when you look at some of the dynamics,
other than to put us into recession where everything crashes and inflation goes down.
Well, that's the thing. I don't want to say. I hate using the R word right now because it's not what I think is going to happen. Right? I don't think we're going to. I think there is still too much growth out there. I still think there is. There is emergence from the Delta variant. I do think, like the news today on vaccine for children, is going to have a positive impact on growth and allowing parents to go back to work. So there's still a lot of positive out there. When I say the fiscal drag, it's drag off of relative highs. We're still spending an awful lot of money, and monetary policy still awfully accommodative. So I don't expect recession. At the same time, you know, if the reconciliation package doesn't get done and the Fed is badgered into, speeding along tapering faster than we thought, and people's inflation expectations are ratcheted higher than even what they should, what they rationally should be reading from real inflation. In other words, they're taking transitory signals and making them permanent. And so then they do things like, change their investment strategies. Then, look, I mean, policy mistakes have happened before, and getting these things right is really challenging. And you can see that happening, and the Fed has never ever, engineered a slowdown without eventually tipping us into recession.
That's a good point. Yeah.
It's just never done it before, so. I guess
and it's because they have very blunt tools. If you over tighten, it works with a lag, and you don't know that you've over tightened until it's too late.
Yeah, and there are a lot of things that we'll talk a little bit more about China, but it's certainly, I think, a bigger risk that central banks, and this is something that President Lagarde has really hammered at the ECB, and that Chicago Fed President Evans has really been the sort of standard bearer for on the Fed, is that on the other side of this, if central banks overreact or have suboptimally tight policies going into this what is eventually comes clear as a transitory inflation episode, you're going to come out the other side in much worse position than you would, and that's when you look at something like copper prices, right? Like an enormous amount of global copper goes into Chinese property. If there is one source of a huge slowdown right now, Chinese property is it, right? Sales are plunging, prices are falling. It's a real issue on the mainland, and copper prices are at record highs, right? And so it's quite easy to see copper being Icarus-like here, basically rising up strictly because of the supply. And then once the supply is met on the other side, it finds that the demand isn't there to support it. And you end up with an overshoot in both directions. And that's the kind of risk that, we're going to be, that central banks are obviously cognizant of, and they're trying to strike a very difficult balance.
Just really quick, just 1 minute on the economic fiscal plans on reconciliation and infrastructure. No one knows what's going to happen. I mean, we're facing some deadlines. We have we have negotiations. President last night talked very optimistically about trying to get a vote next week. Senator Manchin's last comment on this issue is that nothing is going to get done quickly. It's going to take a long time, and he poured cold water before the president indicated he thought things were going to get done very quickly. We still don't know where Senator Sinema is on tax policies. We hear contrasting views on that, and so look, the clock is ticking for them. We're going to see whether we get a deal. I do think it's one thing that is clear is that, we're way off the top end of what these guys were talking about, both in terms of spending and the time span on spending. It's much more likely this week than it was last week that the number is going to begin with a 1 rather than a 2, let alone get rid of a 3. So that's where we are.
But I thought this week was actually quite positive, because before we were talking about,
what does that mean?
We were talking about whether it's going to be 1.5 or 3.5. This week, we weren't talking about what programs make up that difference between 2 trillion. This week, I think people started in the Democratic Party talking about actual programs, and okay, maybe we can make this one smaller, maybe we cut this one. So I thought it was productive. They took the next step to actually figuring out what can go into, say, 1.7.
I agree with you, Brendan. There's no question they're getting closer, but they're still just, I mean, to be this, they're closer. Steny Hoyer was on CNBC this morning, and he's talking around with no sense of optimism that something like this would even happen. It was talking about mark to market on wealthy assets. like that's not going to happen. I know there's rumors that Kirsten Sinema is talking about that, and something that that's not happening, right? It's not happening soon. It's not something that's getting through the Senate. We're not going to change our entire tax structure in a week. That's not happening. Yeah, and then talking about he said he is in favor of doing fewer things big and really well, but there's still a lot of people in his caucus who want to do a lot more things, even if you have to do them smaller. It's like, what are we talking about? Like, how do we have a vote on what next week exactly?
I don't think it's happening next week.
These are the key players who don't know what's likely to be in this thing.
Yeah, I'm with you. And Biden said today he wants it next week. There's zero chance that happens. But I did think the Democratic Party made a little bit of advance in terms of deciding what could be in this thing. I don't think anyone had any clue before this week.
I think one of the things that Brendan's made this point before, but basically, like, if you downsize these programs, and this is what they're doing, all the reports are saying, well, they're going to do free college for 1 year or 2 years, or free child credit for a couple of years instead of indefinitely. Yeah, right. If you do it for,
when was the last time we put in a social, safety net program and took it away? We just don't do that.
Yeah, I mean,
I agree with you.
It kind of just it just hangs around, and the next a child tax credit, even if it has an expiry date, try to pull that off and preside over that getting yanked. That's going to be a tough one. So there are lots of delicate dances here, but at the end of the day, as messy as this sausage making process is, it's hard to think that the Democrats aren't looking at 2022 with increasing levels of concern, panic, and really looking over the abyss here.
No, I agree. So Obama is going to Virginia. They don't want Biden. I think that speaks a lot in terms of the state of popularity right now.
Yeah. Well, hey, why don't we take a break and come back and take a look at earnings and see what clues we're picking up there. You're listening to the Macrocast.
Markets Policy Partners provides sophisticated financial market analysis that is independent, accessible, and actionable for a broad audience. Learn more at marketspolicy.com or visit them on Twitter @marketspolicy.
All right, we're back on the Macrocast. Brendan, what did we learn from earnings this week?
So the last 2 weeks, earnings have been quite strong, and it's really what the market is focused on. Especially the equity market, obviously. But before going into earnings, it was very much trading on inflation fears or China fears, and the last 2 weeks have really much detached from that and focused on earnings. And by far, earnings have been quite good. We've had a couple misses on smaller companies, like Snap is down a bunch and things like that, but the big guys are still doing well. You're also on a year over year basis, having some crazy numbers because we were locked down a year ago. But overall, it's keeping markets, at recent highs. I mean, all-time highs. But also within those earnings, there have been a lot of, like we were saying earlier, kind of warnings about, cost pressures due to the supply chain.
They're all mentioning it, right? It's all
it's across the board.
Pretty much everybody. Even it's funny. Like, I mean, there are all kinds of supply. I think even Snap in their warning, when they took down their earnings, talked about supply issues as well. It is I think every company has a supply issue, a unique one.
No, it's Disney.
Yeah.
A month ago, Disney put out a little pre-earnings warning that they weren't able to create as much content as they had hoped because of supply chain issues.
Yeah, it's just that I think literally every company out there has some kind of unique supply chain issue, and so we're seeing at the same time they all seem to be making money. They're economic activity is running pretty high. And
nobody was complaining about the consumer. The consumer's still spending.
Consumer's still spending, and consumer still seems to have a pretty good balance sheet too. I mean, it's like if if we're looking to the consumer for, to keep this thing going, they seem to be in a good both frame. Well, consumer confidence has come off. They're sort of, and I think it's probably inflation that does it, but that's what they're telling you. They don't seem to be telling you that with their wallets, though. Their wallets they're still out spending and being pretty active.
Yeah, I totally agree. And
next
we've
week,
had significant wage growth, and really, we basically have an $18 new national minimum wage because of Amazon. They're such a large employer that if there's an Amazon in your area and you can make $18 there with benefits, it's tough to compete with that. If you're a local company, you're gonna have to pay the same.
Yeah, you kind of have no choice in those situations. You definitely have to chase them and others. I mean, Walmart has raised.
Yeah, it's not just
exactly. Has raised salaries as well and hourly wages, and so they're having to do it. And it'll be interesting again. Like we've said this many times before. Say it again. A lot of fodder here for economics PhD students to study in the future. Just see the impact of a lot of this.
Yeah, and I suppose psychology. The pandemic
we get a lot of
consumers. The way we get a lot of view the world and work.
Yeah, we get a lot of consumer-facing stocks next week, don't we?
Yes. So it kind of always starts with the banks, and then we kind of transition into the big tech guys. And next week is the consumer-facing guys.
McDonald's,
a Walmart, things like that. Yep.
Amazon, yeah.
So that'll give us an interesting read into the the consumer, where the banks also show that the balance sheet of the consumer is still very strong. The banks released a large amount of the reserves that they had built for loan losses that never came.
Yeah. There was nothing that did anything surprise you that you saw this week in any of the reporting?
Beyond meat, it's down a bunch.
I saw that
on demand. Yeah. People aren't eating it or buying it as much in grocery stores. That's not a macro issue, but it's just kind of a fascinating one.
You get the sense that people tried it and then realized, like, why?
Yeah, it was a novelty that.
Yeah.
I do think it's not going away, but it's not replacing beef entirely anytime soon.
No, it's going to fill a niche, but I honestly cannot see it having. The sort of wild expectations for it surprised me. They made me think maybe I don't really understand American consumers anymore, but this is still a country of beef producers and beef eaters, and I don't expect that to change very much.
Yeah, that's a cultural, unless you demand it. Though the interesting one,
no more than Argentina. Argentina's not going to be on meat either.
No,
right?
No.
Argentina are going to.
That's all they eat there.
Yeah.
But Tesla reported, and also the U.S. car companies. The American consumer really wants electric vehicles, so that's coming irrelevant of what we as a policy. Government do. People like electric vehicles,
and the companies are investing in that future demand, aren't they?
Massively,
yeah, huge investments. GM, I know, has announced some pretty huge investments. Ford has gone all in, leading with its top brands.
So the hybrid Ford F-150 is coming out, and it's completely sold out. I think that tells you everything you want to know about the consumer. If the most popular pickup truck in America of all time people want it to be electric, we're going electric vehicle.
Yeah.
A lot faster than probably people would have predicted.
All right. Anything else? John, any I know we wanted to talk a little bit about China. Is there how are you feeling about China right now?
Yeah, China's in a tough spot. It's interesting, the Evergrande, the beleaguered property developer that is just levered to the gills, and it just squeaked in a debt service payment under the, with just a few days or hours to go before the 30-day grace period ran out. So its execution has been has been delayed again, but nobody thinks that this is a signal that it's going to be rescued or bailed out or anything like that. This is just a brief reprieve before a grand restructuring is put in place. Some smaller developers are also defaulting, but Beijing is really trying to keep this from knocking over any of the bigger dominoes in the space, or taking some of the vitality out of the property market from, after some already pretty, downbeat figures on sales and prices and that sort of thing. So there's a little bit of easing on property credit that came out. And broadly, we had thought that there was going to be, with the National Party Congress coming up next October, it would be inauspicious for the economy to be doing anything other than rising gently and pleasantly into that event, despite the fact that, the overwhelming odds are for Xi Jinping to get the historic third term, right, and to have plenty of his allies beside him in the State Council and Politburo and et cetera. So that is, but, he's not someone who probably will take any chances on that front. And so our anticipation was that by early next year, China would be loosening up a little bit and trying to put some more credit into the system, having tightened this year in a variety of different ways. But it may be coming earlier, given the fact that this energy price shortage is really hitting them at the same time Evergrande is weighing on property and giving them some political fits, given the amount of retail investors in Evergrande wealth management products and the number of people who bought Evergrande apartments that have yet to be delivered. It's they have to worry about. No,
but that's the interesting part about Evergrande. It's not just about paying your debt. They have a bunch of stuff they still have to build.
Yeah,
and that's like social stability. People get mad if you paid a bunch of money and you don't have a house.
It's a social stability issue, and they are going to prioritize getting those done. Right now, the asset sales have not gone well so far, but this is going to eventually be a loss-spreading exercise. Beijing has the ability to translate policy into action in so many different ways in the financial sector that we think that they can hold this off, but they don't want to overdo it. And so we think that, it's again, a delicate balance, but, the growth data that's coming out of China is not looking great, and it's not going to look great for a while. And we think that leaves industrial metals in particular kind of Wile E. Coyote-like, at record highs as Chinese manufacturing PMI tails off significantly. And the correlation between those is historically pretty high, but not right now. So it'll be a fascinating dynamic.
Actually, I have one other cool earnings. It's Pool Corp. They make and install pools. And during the pandemic, everyone wanted a pool because you weren't allowed to leave.
They were huge. Yeah, they were. I haven't heard the pool story, the residential pool story, in probably a year. I'm excited about this update, Brendan.
Yeah. So most analysts thought this year would be a great short because everyone would have not built pools, but apparently Americans decided having a pool is awesome because they had another record third quarter sales, and their outlook is they're completely booked. So we're going back to, I don't think we ever necessarily lost it, but everybody wants a pool now because honestly, having a pool is awesome.
Someday I hope to have a pool. It sounds awesome. I cannot help always thinking though with a pool that I'm digging a hole in the ground and then I have to pay for it forever.
That's exactly what it is. It's a lot of work too.
All right, guys. Great Macrocast. Have a fantastic weekend. Good luck with your numerous sports teams this weekend.
Thanks.
We'll see you. Yeah, definitely. We'll see you next week.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share.